This episode is sponsored by the On With Origins podcast. Learn how credit union experts conquer today's toughest challenges while driving measurable results. Before we get started, a quick word from our sponsor, Community Financial's President CEO Tansley Stern's podcast, Despite Impossible. Now on to the show. Think Studio Lounge interviews brought to you by the all-new Valera. Welcome back to our continued coverage of now Valera's Think conference here in beautiful Nashville. What do you think about that, JB? Valera.
I like
cool
it.
Name?
I like it. The next era, Valera.
I like it.
I think that was part of the idea.
It's velocity and era, the next era.
Yeah.
Combining those two together. Oh, and by the way, where are my manners? We have SavvyMoney's very own JB Orecchia in the studio lounge. How are you, sir?
I'm
good. To see you.
I'm good. Yeah. 13 years now, Mike, into this
all?
journey of building SavvyMoney, and
Congrats, man.
Yeah, it's been a long road, but things are going well. I think the first time I did an interview with you, I was at 100 financial institutions. I think it was a Filene event.
Nothing to sneeze at either.
Austin,
where it snowed.
Snowed. That's
October.
Right. That's right.
It was a crazy conference, weather-wise, and fun as well. So yeah, well, congrats, because 100 credit unions or 100 financial institutions, that's nothing to sneeze at.
Yeah.
Now you guys are at, because I have it down here, 1,260.
Yeah, so we're at 1,300.
Have educated 1,300. Well done, my gosh. What do you attribute that success to? What's going on with these financial institutions that are coming to you guys for your products and services?
Yeah, so just a little recap on what SavvyMoney does. We're an embedded credit score solution inside digital banking, but it's not just a credit score. You can get your full report. You can update your full report every day, credit monitoring alerts, simulator, goal setting, action plans. Mm-hmm. But the real thing that we do that's interesting, right? We take the lending criteria from the lender, we overlay it on top of the credit data, and we show pre-qualified loan offers based on savings the member or consumer can get in their file. Mm-hmm. And we have a whole turnkey marketing platform that surrounds it, analytics. So it's pretty powerful to drive member engagement, financial wellness, loan volume. Mm-hmm. We did a lot with deposits this last year. If you think about it, right, and we've talked about this in the past, my background, I was one of the founders of freecreditscore.com, so that wasn't free. But the entrant that came in the market that really changed things was Credit Karma.
Yeah.
And as I think about it, when I was very intentional when I built SavvyMoney. It's a B2B business. We are not a direct-to-consumer business. And if you're a bank or credit union, you don't want your customers going to Karma and then losing them to advertising.
Mm-hmm. That's right.
And so we wanted to build all that self-contained. We're in 40 digital platforms now.
Wow.
So every digital platform either resells us or we integrate with.
Yeah.
For the most part, they're the resellers of our product. Mm-hmm. And I think over time, it took a little while to get momentum with financial institutions, but then they told two friends and they told two friends and so on. And so we have, over 99% retention of clients.
Oh, even better. That's a great stat to have.
Yeah, so I think it just drives real value, and I think it's table stakes. I think it won't be long before every institution will have to have this built into their digital banking. And hopefully we're the ones to do it.
Well, what do you attribute, you go back to the value of it, what do you attribute that to? Is it the economy going on right now? What are consumers looking for? They want to keep better track of their finances, or what do you attribute this popularity?
I think a lot of it has to do with one, financial wellness is important, but why do you manage your credit? You manage your credit to qualify for lower interest rates, right? And so as you move your credit score up, we alert the consumer of, hey, you now qualify for this rate. And so there's a real association with, if I improve my credit, I'm going to be able to save money. And so people are focused on it. And in fact, the younger generation is like obsessed with the 800 credit score, getting their score to 800.
It's almost gamified,
Yeah.
It's almost a game. So and you guys present that really, really well and then let's turn it toward the credit union.
And it's in digital banking. 75% of consumers say they would prefer to get it through their primary financial institution, right? Like, I don't want to log into another website.
Nope.
When I'm looking at my account on a daily basis, I want those alerts. I want that in there, and I want actionable advice on what I can do. So where am I deficient? Where do I need to work on things? And so That's a big part of it. You're going to keep track of your score and your financial situation. The other thing we do is we've got benchmarking data in there for your spending. So if you're making a certain amount of income and you're spending a certain amount on your bills, we'll show you like you're over-indexing a little bit on your car, like based on what you make. You probably should have a payment that's about $300 less.
Bring it down a little bit.
Bring it down a little bit.
Exactly.
So your discretionary spending, bring it down.
I like that.
Because a lot of times what happens is consumers' credit scores are in the right range, qualify for an offer, but they get turned down because their debt ratio is too high. So getting that debt ratio in line is an important part of kind of financial housekeeping to make sure that you're in a good spot to be able to borrow.
Right, and this is good news, not only for the credit union, but for the consumer as well. It kind of helps them keep themselves in check without getting...
That's right.
We can all get out of control really quickly. We want that bright, shiny object out there, but then you get overextended. But having something like that to keep us in check, oh my gosh.
And with rates going up, it became even more imperative to manage your credit, right? So as that money got more expensive, it's like, oh shoot, I better dial this in because it costs me more to finance my car or credit cards or whatever.
Well, and with everything else going up in price, you gotta, again, you really...
That's right.
Times have never been more important than to keep yourself in check, for sure, and you guys do that really well. And before the recording, we were talking about Gen AI and how that's, so pervasive throughout any industry now. Are you guys dabbling in that as well to help consumers out there?
So we are. We just started.
Okay.
And I don't
like
want
everybody.
I don't want it to be cliche. Like we're not going to be SavvyMoney.ai. But it starts with the data. So we have very robust data that we provide our financial institutions to show them where their consumers are borrowing, what lenders are they with, by credit score band. So you can actually see, oh wow, Cap One, Ally Financial, or Santander are taking a big chunk of my business. In fact, we map it over time so they can actually see their market share and their trends. So as they market their loan products inside SavvyMoney, they can see that they're picking up share or not picking up share. In fact, we show them the median interest rates on a lot of the products where we can calculate it to say, oh wow, auto lending, you're doing really good in the high credit score bands, but in the lower bands, look here, the median interest rate is lower. That's why your market share is lower, right? And so other institutions, the other thing we track is all the click data in terms of what loan products people are actually looking at and engaging with. And if you're getting a high click rate, that could be a product that's popular or the rate is good or your application rate compared to your click rate. So all these become behavioral cues. And so as you think about AI and personalization, it's super important to show users products that make sense for them. So if their auto loan is kind of been on the books a while, they could be a candidate for a new auto loan, or the warranty's wearing out, or something like that, right? So we want to look at the behavior of what are they looking at in the tool, where are they at in their credit life cycle, and what are the right things to do. From an AI perspective, we're just dabbling in, hey, so why did my score change? Really going in and looking at all those factors and giving you an answer to be able to direct you on, well, your utilization rate went up, or you had a late payment come in, or so be able to then say, if you want to get from point A to point B, these are the things you need to do, and this is approximately the time period that it's going to take for you to do that, right? So everyone wants to know, like, okay, just tell me what to do in order to get into a better financial spot.
Yeah, don't make it a mystery, and this really helps out reveal all that type of stuff that you can almost self-service, right?
It's because we're working with financial services, we have to be really careful to give the right advice, right? And caveat that advice with all things remaining constant, these are the things you need to do, but things can change, right? And so you got to keep an eye on it. It's like self-driving cars, right? Like, like it's going to work, but even Elon Musk says, like, hey, still hold on to the wheel. Keep one hand on the wheel for now, like,
I hear you. I hear you.
So I think it'll evolve into something really powerful.
For sure.
And be able to just give people great advice on what they should do. Or if you do things that are going the wrong direction, that should be an alert, like you're on a wrong path. If your debt all of a sudden is, kind of get it in check. Almost like a Fitbit.
Yeah. Oh, yeah. Oh, I love that analogy. Yeah.
Yeah.
And the word, as you're talking, JB, I'm thinking the word empowerment. You're really empowering the consumer here to
That's
really
right.
kind of take control of their finances, which I think a lot of folks want out there, but you're giving them the right information, the right advice, so they can, if they are going backwards,
they can course
we
correct.
can course
That's
correct
right.
and get on.
That's
get on
why
that
in the
course.
back of my jacket it says,
It pays to be savvy.
It pays to be savvy, right? And it does, right? Doesn't it does. If
I
you
think
make
so.
the right decisions,
Yeah.
your life financially can take the right turn.
Yep,
So.
indeed. I want to bring it back to the conference here to think, what brings you to think, I know you guys you've been working obviously with a lot of credit unions here and stuff, but anything particular this year?
Yeah,
this time
so
around?
last year we got added as a preferred partner with Co-op.
Well done.
So
Congrats.
they went through their whole due diligence process and graded us on all these factors and became the lead credit score product to recommend to credit unions. So that was fantastic, and we've had some great success in the market, and so we appreciate that endorsement from Co-op. And now with PSCU, the combined entity, fantastic company. I've always admired PSCU and Chuck.
Yep.
Great guy. It's done a great job in terms of leading that organization. So I think you've really combined two great organizations together, and the sky's the limit.
I agree. I couldn't agree more. Last question for you here on here. It says a recent American Banker story discussed that you guys, One Credit Union's loan growth skyrocketed after auto-enrolling all its members in SavvyMoney. You want to talk a little bit more about that?
Yeah, so our original model was an opt-in model. So you actually log in digital banking, you check a box that says, yes, I want my score for personal use, and yes, I want to be pre-qualified for offers. Now what we've done is a number of institutions love all that data, love the engagement, the financial wellness, the loan volume, and so they said, geez, we'd like everybody to be in SavvyMoney. And so we made it part of joining digital banking. We also allow people to opt out, and less than 0.1% of people actually, like less than a percent.
That's nice.
Yeah,
that's great.
So what happened with Knoxville, and that's the American Banker article, is that the loan volume got so high that they actually had to turn loans off in the tool. So we have the ability to turn on or off. And they're like, oh shoot, like, because we integrate into their loan origination system. That was really the impetus for them moving to auto enroll, was that we actually built a short app integration into MeridianLink. We do that with Temenos and with Origins as well. And so effectively, if you're going to sign up for a loan, you don't want to fill out name, address, social, and all that information. So we have a short app that just says, okay, we already have all that. Just give us the remaining fields that we need, and it's easier, less friction to apply. So what they had to do was they're like, oh shoot, we'll turn that off for now. We got to bring in more deposits and then turn it back on.
Okay.
So that's a good problem to have.
I would think so, for sure. I'm glad you guys have that capability to allow them to do that type of stuff.
The other thing on the AI front that we're doing is more automated marketing, right? So we have the ability within our analytics platform to go in and pull lists based on retargeting behavior. We can see what people are clicking on or what their trend is, but it's a little bit manual. So why not build really more machine learning into it? With the dependent variable of the loans, we kind of know what cues are happening, and so we're moving towards a more automated personalization of offers based on everything that we're seeing in the platform.
And that gets back to the personalization that you were talking about.
That's right.
I'm even hearing hyper personalization now. So oh, getting down to the nitty gritty. To the individual. So this is good stuff. I'm
marketing
so
too. So
you guys.
we do we have a whole marketing portal. So a lot of times with FIs, they're busy, right? And so we try and make all the marketing of our service as well as all the loan products super easy. So we've got 9,000 pieces of marketing. We do best practices webinars every month. We have a smart series, and we get about 500 financial institutions attending every month.
Wow, that's a great turnout.
On a regular basis, and we bring the other financial institutions in to talk about their success. And so learning from peers on how they're doing has really kind of helped accelerate the success of the program.
Completely,
Because we can tell them and say, do this, but if you hear from a peer.
Exactly. That's the same thing with ours. Yeah, anytime we have a credit union come on, our views go way up.
That's
for
right.
Sure. It's a very peer-related industry for sure.
Yeah.
So you guys, you got that on lockdown for sure. So good stuff, sir. Anything else to add before I let you get back to the show here?
No.
Good.
Awesome, Mike. Well, thank Nothing more to add.
Well, you guys are always doing so. You're always cooking up something in the SavvyMoney lab, so we always appreciate.
Yeah, we've got a new product coming out too. I don't know. I'll tell you a little bit about that. It's interesting.
A little teaser. All right.
It's called Get My Rate.
Okay.
And it's pre-qualification for loans. So I don't know if you're familiar with like an auto navigator.
No.
Right. Cap One has auto navigator where you can go in and get pre-qualified without any impact to your credit. But if you get an offer that you don't like, what do? You have to go back in again.
Right.
So Get My Rate is going to be a really cool product in that if you're in a high credit band and you don't get the rate that you want, you set a rate monitor and we'll alert you and we'll tell you what you need to do. So if you have to increase your score by 20 points or get it there, or let's say you got turned down, you're not going to want to keep going back in and having that negative experience. So it's not a no, it's a not now. And basically we'll put you on a plan that says, okay, you're 20 points away or your debt ratio's here. And we'll alert you, we'll tell you what things you need to work on. And we'll alert you when it's a good time to apply.
That's awesome. Can't wait. What's the timeline on that, if I dare
So
ask?
it's probably, full release will probably be in July. It's in beta right now. We have a few credit unions that are marketing it in beta, but we're adding those final features to the product to really guide the consumer on what they need to do.
Awesome. So, oh my gosh.
So now I'm done, Mike.
I think you're onto something here, JV. Especially when interest rates come down, and they will.
That's right.
Holy smokes, the floodgates are going to open.
That's right.
Yeah, good timing on that. So good. All right.
Awesome.
All righty, sir. And as I always say at the end of our interviews, is this SavvyMoney thing doesn't work out, you have a career in broadcasting, sir.
Well, thank you. That was originally going to be my career. So
you got a good voice for it, for sure. So
awesome.
Good stuff. All right, JB, always a pleasure.
Thank you so much.
Keep up the good work there. Congrats on all the success. Well deserved.
Bye, everybody.
Think Studio Lounge interviews brought to you by the all-new Valera. Quick word from our sponsor, Community Financial's President CEO Tansley Stern's podcast, Despite Impossible. This episode is sponsored by the On with Origins podcast. Learn how credit union experts conquer today's toughest challenges while driving measurable results.